What's up, everyone? It's Scotty with MoneyVest. So markets here snapping their 4 to 5 days of losing streak and pushing higher with the NASDAQ up over 27 basis points. Not only that, the intraday move was very interesting with the NASDAQ rallying a little bit over 2% intraday from low to high and then settling in at just over 13,000, and the S&P 500 also pushing higher intraday, although still closed red, down about 17 basis points, and the Dow Jones was down over 190 points on the day. So a little bit of recovery here in NASDAQ and tech-related stocks as soon as Bill Ackman also tweeted out that he has covered his short position on the Treasury market, which obviously did bolster a little bit of tech and NASDAQ to rally back higher as the yields, the 10-year yield more specifically, dropping back under 4.9%. So we got lots to unpack. Bitcoin here is rallying, and of course, markets overall pushing somewhat higher intraday. So as always, if you enjoyed this video and find it helpful, make sure that you drop a like and subscribe to the channel. That's all I'm asking in return. And the link to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the money vesting fair values. And of course, we've got buy and sell alerts, options alerts, trade ideas. Everything's going to be included. You can also go to moneyvest.com and sign up for the early access to our platform that's going to be launching in 2024. But this right here are all the MoneyVest fair values that you can indeed access. This is going to be a spreadsheet which is updated every single week with new stocks, and it's going to have the intrinsic value. And of course, it's going to have the stock prices and the difference between my intrinsic value and the current market price and how much the stock needs to come down or go up in order for it to be trading at its fair value, right? So all that is going to be available. There is a 16% annual discount available till the end of this month. So again, link's going to be down below. We'd love to have you on board. So Bill Ackman covers bet against the Treasury, says too much risk in the world to bet against bonds. And he says there is too much risk in the world to remain short bonds at current long-term rates. We covered our bond short. I did a video on this earlier today, so definitely do check that out. And what he really means by that is if there is risk in the world, if there's recession risk or global contraction risk with respect to economies worldwide, well, that's going to lead to interest rates coming down, and the yields, especially the current long-term rates that they're the 10, 20, and 30 year, is going to be very, very attractive relative to equities if there is any type of risk that materializes in the global economy, right? And that leads to more demand, more buyers stepping in to buy those bonds, and the yields to start rolling over, which is one of the reasons why they are covering their short positions, so they don't want to be in that situation to be covering on the way up, right? They want to be covering on the way down. So the bond vigilante is coming back. UBS also mentioned, and the bond vigilantes are coming back as investors continue to sell amid the prospect of higher for longer interest rates and a growing fiscal deficit. And they also mentioned basically saying that the bond vigilante is coming back. So this is very important for asset prices in equity, house prices, fiscal policy, monetary policy. So no longer is this a free ride on the bond markets anymore. So the government has to be very careful in terms of the future. You saw that last September. You saw that in treasuries. A few months ago, most people expected the U.S. government deficit would keep going down with the growth slowing. It was 3.9% last year, and it's actually going up with growth slowing. That is quite alarming for the bond investors, right? So what they're really saying is that the government's spending all this money. They're taking on a lot of deficit and a lot of debt. They're spending a lot of money, and we're still not seeing a significant amount of growth. So the return on capital employed by the U.S. government is not yielding a very high rate of return. And for that reason, bond investors are still, spooked, and it is quite alarming from a bond investor standpoint. But nonetheless, I think there is asymmetry when it comes to risk and reward in the bond market, right? So there is marginal risk here. Sure, I mean, yields can go higher even further depending on what the fiscal policy does in the U.S. So yields can continue to go higher to 5.5%, 6%, maybe even higher. But the marginal risk relative to the significant amount of upside, that's the asymmetry when it comes to the bond market risk and reward at the moment. Now, NASDAQ snaps off 4 days of losses as 10-year yield retreats from the 5% level. So Pretty significant move to the upside from Nvidia, pushing up over almost 4%. They are in talks with ARM Research, ARM basically kind of producing a chip with ARM, and Intel basically dropped on that news, down over 3%, but Nvidia rallied almost 4%. We got Google and Meta pushing higher. We had Amazon and of course Tesla basically flat. Tesla bounced perfectly off of 200s, low 200s. We talked about that low support, low 200s for Tesla. So very, very nicely bouncing off of that level. Apple here flat. Microsoft pushing up over 81 basis points at the moment. Energy prices selling off, so energy stocks were down, and we did have financial stocks also rolling over. So comm services pushing higher, technology also up, consumer cyclicals pushing higher, and everything else was down. And in the last 1 week, we've got all 11 sectors selling off here. And over the last 1 month, we had communication services up over 2.5%. That's the only sector that's up. Everything else is straight up down. Sugar prices, we had cocoa prices, palladium, 30-year bond, and the orange juice prices pushing higher. No surprises there. And everything else rolling over and obviously selling off. And we got Bitcoin with a very nice rally up to over 31,700. Ether also pushing up to over 1,700 at the moment. So lots of momentum coming in for of course crypto miners and crypto stocks. So like for example Marathon up over 12%, CleanSpark was up over 8.5%. We had Riot up over 9%. We had Coinbase pushing up over 3.5% because Bitcoin with a very nice candle up over 5.5%, pushing up to 31,700. Not to mention Ether also up very nicely, up over 3%, pushing up to over $1,700 per coin for Ethereum. Crude oil prices here once again rolling over, so down 2.5%, so just a little bit over $86 per barrel, taking down the energy sector with them. And volatility was up to as much as 23, right? So I did buy a little bit of VUG, SMH, did pick up some TMF today. So again, if you want to get alerts to everything that I am buying or selling in the markets, link's going to be down below for you to join. But we've talked about the volatility, right? 23 is a very, very critical level. It's in the 75th percentile for the VIX. We got up to that level and then sold right back down to 20s. But really, I'm waiting for 30, right? 30 is going to be a very, very nice level for the VIX, something that we don't really see that often. And it's going to be in the 95th percentile. So that's the level and the threshold to really breach for the volatility for me to be super aggressive on the market, because at that point, it is going to be very interesting from a technical perspective, from a statistical perspective, but we're not there yet. So right now, 23, we got up to that level, then sold right back down. And this is going to be somewhat of a support. You could call it somewhere between 18 and 20, as we have previously gone rejected. So that's been the ceiling, can now start acting as a floor for the VIX if we do see some more momentum back higher up to 23 and 30 levels. So going over to the markets, so S&P 500 here, you'll notice with a very nice sort of a candle, right? So we are still obviously selling off, and we're very much in the context of this lower highs and lower lows, something that I've already mentioned. So this right here is the downtrending channel for the S&P, and right now we're just sitting above 4,200. So if I bring up the moving averages, you'll notice that the S&P is breaking down below the 200 SMA. In fact, it did break down below the 200 SMA, but now it's going to be settling in at 41.75. So this right here, very, very important level of support in line with this previous resistance. A couple times we have gotten rejected at that level. So again, if I were to mark that out, you can see resistance, and now acting as a potential support at 41.75. And of course, resistance all the way up to as much as 44.50. That's going to be, again, in the context of this downtrending channel of lower highs and lower lows. If we do see that momentum back up, first level is going to be 4,300. All the way up to that next resistance that I mentioned at 44.50 to as much as 4,500 for the S&P 500. So those are going to be some very, very important levels to watch. But right now, like I said, we're very much in the context of this downtrend of lower highs and lower lows at the moment for S&P 500. So that's really where we are at the moment. Talking about the NASDAQ, and NASDAQ also very similar to the S&P. So you can see that we continue to make these lower highs and these lower lows. So this right here is the context of this downtrend, something that we have discussed and we have been discussing on our previous videos as well. And right now you'll notice that we are starting to break down below this 13,100 level. In fact, this level started acting as a resistance on the day. So this right here is going to be a resistance now for the NASDAQ. And unfortunately, next support is going to be down to 12,250 for maybe even the 200 SMA, 12,700. That's there's some support sitting right there. We got rejected at the 100 SMA over here, so you'll notice that we got up to that level, got rejected, and next support really is going to be at that lower low and that 200 SMA sitting at 12,750. So it is possible. Again, I think it is possible that the markets do see a nice recovery back up from these levels. So both the S&P and the NASDAQ, there is possibility that we do see a nice, rally back up for both of these indexes. So from a technical perspective, like I said, there is a potential for somewhat of a long trade because it's still in the context of this downtrend, but it's now making that sort of a leg back up or that reversal within the context of this downtrend, right? So there is a possibility, like I said, for the markets to see that technical bounce back to their lower highs. But again, it would be trading against the trend, so we got to have very tight stops, and we have to understand that trading against the trend is more challenging than trading with the trend. And right now, since it's making lower highs and lower lows, going long here, the risk reward is good, but the probability of success is low. So that's something to keep in mind, obviously, for the market. Now, Apple here, on the other hand, also perfectly bouncing off of that 200 simple moving average. So, getting down to 169, 169.93, so a little bit under 170, and then getting bought up fairly quickly. But this right here is, again, the overall downtrending channel of lower highs and lower lows. And again, the resistance stays put right here at close to $180. Support level is going to be right at that 200 simple moving average, all the way down to as low as 157. That's going to be pretty much the lower low in case we get rejected all the way back down to that level, 157. Very strong support. I think at that point, I'll be looking at very aggressively starting to add a little bit of Apple once again, even though my fair value is going to be lower, sub 130, but I wouldn't mind starting that position in the 150s and then averaging all the way down to those levels. But this right here is where we are with that lower high and lower low for Apple. Now, talking about Amazon is also coming down to a very nice support. So this right here, the green rectangle inside this level, very strong demand for Amazon, and resistance obviously stays put all the way up to 146, and we're still within the context of this downtrend getting rejected at that 100 simple moving average. So, the only support level that I'm watching right now carefully is going to be that $120 to $125 per share level inside this green rectangle for Amazon. Tesla, on the other hand, so this was not surprising at all. We talked about the low 200s for Tesla. I did multiple videos on the technicals of this company. So this is exactly where the previous resistance was. And now we're starting to find support at that level. So it's not a surprise as demand is starting to step back in for this company. We got down to $202 and then, of course, pushed right back up. So intraday, very nice recovery for Tesla. And it is oversold. So if you come back to the RSI, to the MACD, we're incredibly oversold. We got a little bit of a gap to fill over here. So from a risk reward standpoint, I wouldn't be surprised if Tesla does see some buyers stepping back in to get back up to 255. Again, that is a resistance, right, inside this lower highs and lower lows, but we'll find out if that actually ends up happening or not, because the sentiment around Tesla right now is weak with the margin compression, the earnings miss, the delivery miss, and everything that Elon Musk is doing with the price cuts. There's a lot that's going on around the company, and I think they got a probe from DOJ today around for something as well. So there we go. Tesla confirms probe into executive perks and related party deals from the Department of Justice as well. So I don't know how that's going to play into the sentiment, but right now oversold technically. But from a fundamental standpoint, obviously there are some concerns related to the margins and the earnings for the company as well. So support level in the low 200s, like I said, resistance all the way up to 240 to as much as $250 per share for Tesla moving forward. Let's talk about NVIDIA. NVIDIA here, very nice rebound from that support of low 400s. It got down to 409, and this right here is literally the support level that we have talked about. And right now, very much still in the horizontal pattern of, going sideways. So this right here is basically how it's been trading. And the catalyst that I was talking about earlier, there we go. NVIDIA plans to make ARM-based computer chips, which resulted in Intel selling off. And AMD is also planning to make chips for computers with ARM technology. And of course, AMD also was lower a little bit, and their chips are going to come as soon as 2025. But Intel sold off on this news. But nonetheless, we've got a lot of support here, a lot of resistance here, and NVIDIA pretty much just trading sideways in that range. Advanced Micro Devices, on the other hand, also coming down over 1.77%. In fact, it was one of the only stocks that was down in our magnificent 8-9 companies here. So everything was green except for AMD, pushing down over 1.7. And this right here is going to be that support and that demand for Advanced Micro Devices. The moment it breaches below $100, I think it is possible that so right now we're at that 200 SMA. So if you remove everything, right now we're right at that 200 SMA. We bounced off of that level back in September with a very nice rally back up to over 109, 110. So that was a 16-17% move back higher, but then got rejected at $112, $110, and we're back at that 200 SMA. If we break down below this level, well, then there's possibility that there's maybe some support sitting for us at $94, $95, so right here. But in case that support doesn't hold up either, then I think low 80s is a possibility for advanced micro devices, which only will create, in my opinion, better buying opportunities for this company over the long term. So those are some levels to watch right now, coming down to a very nice support level. Talking about PayPal. And PayPal here also getting bought up intraday, but continues to move lower, hitting a new 52-week low down to 52.65. And again, it's just been on this brutal sell-off. And unfortunately, we don't have a very strong support to pinpoint at the moment, because maybe I guess we can put down a support right over here at $51 per share. Something that PayPal has validated in the past from back in 2017. So we're obviously going back 6-7 years to figure out where that next support is going to be. But right now, of course, incredibly oversold. The volume is low. The earnings are really going to be the make it or break it moment for PayPal moving forward. Talking about Square. And Square here also just consolidating sideways. So it was slightly down about 18 basis points. Resistance stays put all the way up to $50, $52. And support level is going to stay put at $40, $41 per share for Square at the moment. Talking about Meta platforms, and Meta here starting to push right back up, so that's really good. Support level once again getting validated at $312, $313. So this right here is a level that we have talked about, previous area of demand and a resistance for Meta. So lots of buyers are stepping in, lots of support sitting right over there, and resistance going to be $325 per share for Meta platforms moving forward. So that's going to be that resistance. Support level is going to stay put in the low 300s for this company. Talking about Netflix continues to move higher, breaking back above its 100 simple moving average. We've got a massive gap to fill here after the earnings, of course, and that next resistance and target is going to be all the way up to 452. So we'll eventually find out whether we get back up to that level or not, and support level is going to stay put down to $348 per share. Google here, on the other hand, also getting a nice bounce back higher from its 100 simple moving average. So intraday pushing up very nicely from lows of about $135 to close up 2.5%. But on the day, of course, it was up 52 basis points from previous day's close. But resistance now is going to stay put all the way up to 138. So this right here, 139 actually. So this right here is going to be that resistance for Google. So basically, if I were to mark a very nice resistance area for Google, that's going to be right over here. There's a lot of supply sitting over here, from the past, from back in March of 22. From more recently, from back in September of 23, and of course, more recently over here from October, we've gotten rejected in the 130s, 139 to 144. That $5 range is going to be this red rectangle right now as a resistance. And finally, we got Microsoft and Shopify and Face. So Microsoft here just consolidating sideways, so not really moving everywhere. 81 basis points. Resistance going to stay put at $340. Support level is going to stay put at $311 per share. And finally, we got Shopify and Enphase here. Shopify is starting to fill that gap a little bit on the downside. This right here is going to be that gap that it needs to fill, somewhat filled today. So we're going to close that in. And resistance is going to be at $55. And finally, Enphase continues to sell off, down over 2.6%, down to $96. And next support is really going to be down to $92 per share for Enphase. And, obviously it's broken down below a huge area of support after the earnings preliminary numbers coming out from SolarEdge. So SEDG rebounding a little bit, so a little bit of a dead cat bounce here for SolarEdge, pushing up over 3%, but Enphase not able to catch any bids at the moment. So earnings are coming out for Enphase, which are going to be very, very important for the company. So bottom line is, I think there's a lot of stocks right now that are oversold, and especially the S&P, the NASDAQ, that are coming down to a very nice area of support. It is possible to see a bit of a technical rebound for the markets, considering the yields are retreating as well. So I wouldn't be surprised to see that leg back up, but we have to be cautious and understanding of the fact that it would still be very much in the context of this downtrend, right? We're not out of the woods yet. That I've mentioned this time and time again, that there are no confirmations for us to start seeing some uptrends yet, because we're still in the context of this downtrend. Same thing with the S&P, same thing with the NASDAQ. So hope you guys enjoyed this video and found it helpful. If you did, make sure that you drop a like. Don't forget, a lot of available benefits, a lot of members-only private videos, intrinsic value spreadsheets. Everything's going to be available for you guys to access and join and take advantage of. 16% annual discount available till the end of this month with the link down below. And as always, happy investing. I'll see you all in the next video.